Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Smash that like button. Subscribe if you haven't. Just a little disclaimer. Nothing should be construed as financial investment advice. These are just my opinions, thoughts on the market. Read more below. Anyway, let's get into it. It's the weekend. I did a video earlier in the morning. You can look in the cards. I'm not sure, up there. I forget where, but somewhere on the screen. You can go back to it. But one of the things I want to talk about, I don't talk about as much, heavily involved in gold equities and mining, but rarely talk about them. I'm not going to talk about them. I'm just talking about a general overview of the sector. I'm not talking about any specific buy or sell, any specific companies that I like or anything. It's just general overview of the gold mining sector and why I did something. I talked about what I sold at 3,000. It was mostly, it was one large cap mining and a couple of the big royalty and streaming just to pay off loans and everything. And I own juniors, mid tiers, miners. I think miners are going to outperform royalty in the next upswing. But I was going to say this is why another reason I just hold on to juniors because I think we're at the point where you can wake up overnight and your position in a small company can be up 60%. And I'll just give you an example. So, full disclosure, Triple Flag, I own that. Origin Royalties, I own that. I got this at 30 cents. And I did the research myself. I don't have buddies like a lot of these people on these gold channels where they talk these management and they get the inside. No, I had to figure this stuff out by myself, solely online and everything. So anyway, Triple Flag acquires Origin Royalties, uh, and it's approximately $2 per share. So when I had it, Origin Royalties. Let me show you. This is just educational. It's not a buy and sell. Individual stocks I talk about, or none of them are buy and sell. I do own these two, but remember, none of this is financial investment advice. So right now it's at 130. Let's see today. Um, 5 day. So look at this for roughly. We'll do 6 months. I had this. This was at $1.10, but it went to 89, and it would just float around here, basically around $1 for the longest time. Of course, year to say it's up 40 cents. But yeah, if you look at it, brought around here when it was really low. No one cared about. I think I brought it here or here. Forget exactly when, but if you look at it around 2024 May, it would just float, and you can see it's right here. Go up here, go up down. And it would just float a little, sort of. And then Triple Flag offered to buy it, and it just pumped up. Look at this 5 day, 1 month. Let's see. Yeah, Triple Flag, and it just boom goes up. And of course, it's going to be bought, in my opinion, it's going to be bought out at $2 a share. It's not a pure buyout. It's like 165, and then there's spin outs. Let's see. The value is, but let's see. Either like 160, yeah. Here it's like $1.63 in cash, or the shares equivalent of Triple Flag, and then you're getting 0.25 shares of their origin spinco, which is going to happen. So Yeah, and that's one. And I think we're at the point where the last leg, this is when you'll see companies just right now, these are the best of the best. Like Origin Royalties has a great royalty, big royalty. But you're going to get to the point where you're going to see crappy companies start getting a bid. But this is why I'm not really selling juniors now because I think we're at the point where if you have good ones, you could wake up one day and this holding doubles overnight. Like, look at me. Went from $1.05 to $1.30. It's 31 right now. Just completely overnight. And I had a lot of shares of this, so that's one example. This is royalty and streaming. It's not. And then here's the other one. Now, this company is years off from production now. Full disclosure, I own Wisdom. I don't own Angus. I used to own it. I sold it. I wish I didn't, but I at least using it as tax carry forward. But if you look at it, they're acquiring in a cash shared deal. So, and it's solely to get more of its land position. That's why. So yes, you're getting a lot of 0.62 in cash and point share of wisdom for a total value of 70 cents per share. It's 59% premium. So yeah, look at this up here. If you sold this, or if you're like me, you sold this well, I sold this a long time ago, so it wasn't like, but if you look at it, 59, it's 50, overnight, you get a 59% premium. Uh, And I think we're getting to a point where the beginning of the MMA started with like Barrick and or Newmont and everything, but I think it's starting to go down the chain now. And another one I own both of these, full disclosure. I'm just talking about these because I'm familiar, but the original terms was a merger of equals. And I didn't sell anything. I wasn't thinking of anything. And one of the reason why is now, if you look at this, there's a 10% premium now, the Calibre shareholders. They're seeing all these other mergers. They're like, wait, I don't want to do a pure merger. I want a premium. And this could go up even more. I don't know exactly. I don't want to give financial investment advice, but now my Calibre shares are now getting a premium. And so I have more money. And instead of like selling it, let the deal come through. And you're starting to see it going to the bottom of the chain. Those are just three examples of this. This was originally a merger of equals, but now Calibre shareholders, because the shareholders are pissed, they're getting a premium. So, and there's just let's see, junior mining mergers and acquisitions, Lumina Gold. Let's see. Let's see. Gosh, they can't just let it. But you're starting to see the lower. All right, so this is 7 days. Lumina Gold. Now it's just acquisition by CMOC. So you're starting to see. So yeah, you're starting to see. I don't know exactly. I'm not talking about it, but you're starting to see some of these, and that's why I wasn't willing to sell when I sold. It was just mainly it was Hecla. Not saying it'll do bad. I think it'll do well with silver, but the Cisco Gold royalties. I sold a little bit of triple flags. I may be getting those shares back. Uh, I sold what was the other one? some of Wheat and Precious Metals and Franco to pay off all the loans. And the reason why is those things now they're going to be using their share price so as currency, and they're going to start going down the chain. And I think that's going to happen. In terms of this, more economics, U.S. Postal Service raising prices. This was on April 9th to 78 cents. And I just wanted to point this one out. The Fed has this stability report, which I want to do. But if you actually look at this, all these threats to stability, if you look at it, valuation pressures, that means asset valuations are way out of whack. See that now? Greatly overvalued. Excessive borrowing by businesses and households, check. Been doing that. Leverage with the financial sector, check. And then funding risks. A lot of things are coming due in 2025, so yeah, that's the other thing I just wanted to point out. But yeah, that's the thing I wanted to point out is gold M&A. It's starting to heat up, and I think it's starting to go down the chain. Everyone talks about, if you look at it a year ago, a lot of this, Newmont. Let me see, Newmont. Let's see, Barrick buying out. Forget. A lot of this was from. A lot of this was from the seniors, and it was seniors buying out other seniors. It was not. You didn't see, smaller mining companies like the ones I pointed out being part of the bottom of the chain. And generally, that's what you see. Triple flags in medium term. But when you start seeing Franco and Wheat and Precious Metals buying out junior, mid-tier or small tier or junior royalties, that's when you know a top's coming. But we're starting to see that, and I think the next wave is euphoria. So anyway, that's all I have. Hit that like button, subscribe if you haven't. I'll see you next video.